market value aside, this is not something that I would ever feel relieved about. I mean, an unprecedented event happened. Many people lost money and got hurt. I'm hurt. I feel like our community is hurt. Our token holders are hurt. Our investors are hurt. And I feel responsible, even if I didn't do anything negligent or malicious or anything.
I am curious though, if your investors, when you say your investors are hurt, like I wonder if they're actually down necessarily, even if it is trading at 70 cents. Like you said, you've been through the
I think they're still not down. And that's why, again, investors who had liquid tokens still haven't sold any liquid tokens.
Welcome in, everybody, into another episode of Coinage. I'm your host, Zach Guzman, coming to you live from our Brooklyn studios here in New York City. A lot going on in crypto right now. But this weekend, the wider world is reacting to a plunge in one token from a blockchain that was in the real-world asset space, is in the real-world asset space. As you look at that chart here, pulling it up and looking at the reaction right now to the Ohm token, falling by more than 80% in a day, erasing about $5 billion, at least in terms of value on paper. Everyone has a lot of questions about what happened. And hopefully today we're going to be getting a lot of answers in terms of what went into what we've seen play out. And I want to give credit to the co-founder of Mantra coming on to Coinage today to answer those questions for you. John Patrick Mullin joins Coinage. JP, good to see you, man.
Thanks for having me on. I appreciate the opportunity to discuss what went on and what we plan to do about it.
Yes, thank you for coming on and joining us to kind of dig into this. I just kind of want to start with, you were tweeting about this yesterday, talking about things that you've uncovered. What has happened in the last kind of 24 hours since you see this play out? How's it been for you?
Yeah, I mean, obviously it's been a long, tough day for myself, for the team, for the community, most importantly for the community. Maybe I can just walk you through the series of events that unfolded and, kind of unpack a little bit of what went down and kind of where we're at right now. So I was in Paris last week for Paris Blockchain Week. I boarded a flight on Saturday Paris time to arrive in Korea, in Seoul, where I'm currently at today in my hotel room. We were hosting an Arte-based summit today, which I attended, and I'll talk a little bit about that. Basically, I went to bed around 12 midnight local time. And I think people saw my last tweet, which just happened to be that I was on a flight and that there was no Wi-Fi. So people thought that I was flying during this time, but actually what happens is I was just sleeping because it was midnight. I was woken up by the hotel calling me around 5 a.m. The team was able to get in touch with the hotel because they couldn't reach me on my phone, and basically was met with this whirlwind of what's going on, tokens down, et cetera, et cetera. So obviously this was a pretty frenzied scenario. We went and looked at making sure there wasn't an exploit on the chain or tokens hadn't been stolen or anything like this. And effectively what we quickly uncovered after speaking with some of our key partners and investors in exchanges is that there had been massive liquidations on centralized exchange venues where Ohm had been used as collateral for leveraged positions, and I think had also been leveraged itself and longed. And effectively what happened is these positions were forced closed in a very short period of time over a low liquidity scenario on a Sunday evening, basically, in Asia time at least. Again, I was in dead asleep, and these positions were closed out rapidly, causing a steep and significant price reduction and cascading fall of other liquidations and selling across exchanges and venues that caused this significant reduction in price. So yeah, I mean, basically, I woke up to this. We were able to then put out some messaging that said, we're looking into this, and we'll continue to, provide as much communication and transparency. And we've been in touch with basically all of our investors, partners, exchanges, community members, and are here to communicate with everyone about exactly explicitly what happened, what we're going to be doing about it, and answer any potential questions, because obviously there's a lot going on right now.
Yeah, and just so everybody knows, obviously, you and I haven't really spoken other than lining this up to have this happen. I certainly am just kind of waking up to kind of what happened, and as you said, literally, we're waking up to kind of what happened. But I was kind of surprised in terms of how long you and this project Mantra has been around for quite some time, and so I guess if we can back up to kind of even before this crash.
Sure.
I guess, for people who don't know, what you guys have been trying to work on is it's a layer one protocol tied to real world assets. You guys are based, I believe, in Dubai is where you spend most of your time, the UAE, in terms of who you've been working with. And what this project's all about is tokenizing real world assets. But before even your guys' layer one launched last year, there was basically years before that with the Ohm token
Yeah.
as an ERC 20, I believe, in terms of Ethereum token
Yep.
being implied here. So why don't we go back to the beginning in terms of what went into this? Because as I was looking through it, there were a lot of tokens that were kind of on a bunch of different chains. I mean, I'm curious to
Yep.
know if you've identified more about, you mentioned an exchange here, who was kind of involved
Yeah.
in terms of, if it's not your investors and you haven't sold, which again, to your point, I haven't seen that. But what did you learn
Sure.
more about kind of that piece of this?
Maybe I'll just kind of walk you through the founding of Mantra and how it all came to be, and then you can kind of understand the dynamics of the two, the ERC versus the mainnet coin, right? So Mantra was started in early 2020 during the middle of COVID. We launched Ohm ERC version August 18th, 2020. So it's almost a 5-year-old project at this stage. We got listed on Binance in March of 21. We'd initially launched as a DeFi protocol, and built out some products in the early days. Obviously, we rode that kind of initial DeFi summer wave up, and we rode it all the way down too. Mantra suffered significant retraction where we were at one point in 2023 going through the bear market, I think at 1.7 cents in October of 2023. Around the end of 2023 and beginning of 24, I met with some of our key partners now that we work with, including Sharuk, which is a UAE-based fund, and Laser Digital, which is the crypto arm of Nomura. And they kind of helped us raise some institutional capital to really bring this idea together of basically a permissioned DeFi protocol. And we've been going through licensing with VARA at the time, the Dubai regulator. We actually got our licensing issued earlier this year for the first ever DeFi licensing approval in history. And this other layer one blockchain that was meant for tokenization that had inbuilt compliance and permissioning and identity layers included. So around that time is when we came out and tried to put these token models together. They were initially going to be run separately. So we had the Mantra token on ERC, and we were initially going to launch the chain called Omega, and we're going to have AUM token. And during this time is when we kind of brought those two things together. We had the community vote on this, and they said, hey, we would prefer to have all of the support for OM, rather than two tokens. And that's when these things came together, and we started working on how can we develop an institutional real world asset business in the UAE. We had some major announcements over the last months with MAG, with Damak Group for our real estate initiatives. We obviously got our licensing in Dubai with VARA, and we launched our chain at the end of last year. So around that time is when the chain launched. We started going through a bridging process. And now we basically have the ERC token, which at the time when we launched the chain was, I think, 96% in circulation. Now it's like 98% in circulation. It was a hard capped ERC token, 8888 million. All of that is obviously verifiable on Etherscan. You can see where the wallets sit. Many of them are exchanges and other labeled wallets. And then we also have a supply on the mainnet side. And on the mainnet side, the vast majority of these tokens are locked in custody, including with qualified custodians like Anchorage, and enforced vesting with these third parties. So all this stuff has been verified. We have a transparency report we actually put out just last week, because people were asking for some specifics and details. And we'll continue to provide as much transparency about wallets and things as possible. But yeah, basically you have ERC tokens, and they've been bridged to I think they're on Polygon through the Polygon POS bridge. Binance has has a BSC version of the Ohm token on BSC, and there's also a base Ohm, but it's all part of that existing ERC 8888 million supply.
Yeah, and I think that's kind of what's interesting as I looked into this too, in terms of kind of some of the mirroring pieces as well. You took kind of some of those tokens and mirrored them to the new chain. If someone wanted to take one, it would be burned and then converted over. And
that's correct.
Every time there are projects that have been around for a while, there are decisions that go into processes like these. But to return, I guess now that people have the context around some of those decisions and these tokens existing on a bunch of different chains and the like, I guess if you go back to kind of how many tokens could have been out, that could present the opportunity for someone to build up a very large position on an exchange using Ohm tokens as leverage. As it sounds like you were describing yesterday, there is someone out there on an exchange. They have a very large position. Exchange says, hey, you're going to get liquidated. There can be a process when that happens. And it
Yep.
sounds like this basically was okay. That large position was liquidated, and then that floods the market with a bunch of ohm tokens that then push the price down. And so, did you learn
Yeah.
more about A, who that person may have been, B, which exchange, what that process looked? Were you notified before that liquidation took place?
So we'd been in touch with exchanges prior, asking about like, hey, when do tokens get put on exchange? Like, do you know these wallets? Do you know who this is, part of? And is it the team? Is it market makers, et cetera? So in this particular instance, we'd been asked by several different exchanges what was going on. And this is not from like the last 24 hours, but this has been over the last, months actually. And we don't know. Particularly in the last 24 hours, we had been in touch with several exchanges asking about where these tokens are coming from us, on exchange from collateral, and they'd been coming from wallets that had been funded from other exchanges that were clean and fresh and had no connectivity to other wallets that I was aware of. At least I label all the wallets that I'm aware of on Etherscan, so I can easily track everything. And these were all clean, fresh, unmarked wallets. And we are aware of what some of the exchanges that we think had a role to play in this, but I would refrain from commenting at the moment because together with our institutional investors and partners, we are exploring whatever legal recourse we may have to support our community and the investors who have been in our opinion harmed and wronged here.
Mm-hmm.
But it is clear that there was massive forced liquidations in a low liquidity environment on a Sunday night. Again, we haven't been in touch with these investors who were liquidated.
Yeah.
We're in touch with our institutional partners like Sharuk and Laser and so on. But we,
And to be clear, those
through,
those those partners have come out and said that they haven't also similarly Sharuk and Laser
that's
Digital
correct.
both posting saying that they weren't the ones who sold here. And so I guess, you've made mention a couple times of the low liquidity environment in which this all happened on a weekend and kind of
Mm.
off hours, so to speak. But I assume you guys have also worked with market makers, and that's kind of an interesting
Hmm.
piece to explore here too, because I assume that that's kind of why projects work with market makers in terms of
Sure.
helping for instances like this. Um,
Yeah.
are you able to say which market makers you've worked with here and what kind of went into that in terms of, I'm sure you've had discussions with your market makers since that's what they're in theory at least supposed to be
Yeah.
doing at times like these.
Yeah. So we have several market makers and they are all our investors. So we work with, multiple large trading firms that are investors. And, they actively support the markets and have their own positions in Ohm as well as loan agreements with Ohm. These market makers, I don't think, frankly, that the positions that they had were capable of handling this massive force selling, which, to my understanding, was in the hundreds of millions of dollars. But I don't have a specific number. And that is one thing that we are looking to get more details on. And as soon as we have more information, we'll be publicizing this as quickly as possible.
100. You're saying that the position that you've identified here of $100 million are in that range.
We believe it was in that range. Yes, I mean it was a very large position. It was a multi-billion-dollar token, and there was large investors who had been in for a long time, and were using tokens to support other collateral positions, to support some of their own leverage positions,
Mm-hmm.
and within a very quick window of time. I mean, again, I went to bed at midnight, and by the time I woke up at 5, I think this had already been going on for an hour or two even. So it happened very, very quickly. Where we were made aware of anything going on. So that's why we say it was a very unprecedented, very quick action, incident. And obviously we're exploring and we're trying to get as much information as possible that we can share with everyone.
Yeah, I mean, I would say I would echo the case that it is somewhat unprecedented in terms of the run up and what happened over the weekend. Mostly because if you look at the chart here, JP, I'm kind of curious, at least in terms of what you can talk about, because when
Mm.
you think about on-chain transparency, a lot of what people are talking about now, if it's not your main investors, is okay, who could have built up $100 million position here in order for a
Mm.
liquidation type event like this to have happened? And that's one of the questions that I feel like might be stuff that happens off chain, right? In terms of,
Mm.
things going well. So let's talk about that, because I think it's something that maybe a lot of people in crypto don't necessarily know. As a founder myself, these are decisions that are tricky, right? As a founder,
Yeah.
you're essentially saying, where are the trade-offs, right? And what do I want to do here? How do we get the token on these centralized exchanges? How do we work with market makers that aren't going to, stab us in the back when things happen?
Yeah.
And so I guess if you can back up to 2024 as you're rolling this out, let's talk about the decisions in terms of whether or not there were OTC deals, what these kind of
Sure.
lockups look like, how it can get to the point that that happens. Because as we said, there were a lot of tokens floating around before your guys' mainnet even launched. So what do those
Yeah.
deals look like? Is there anything there that kind of feeds into what we just talked about?
Yeah, absolutely. I mean, so we've done kind of like two mainnet token fundraising tranches, which are all again as part of that transparency point that I mentioned, and these actually are still locked in custody on Anchorage. So we have a 12 plus 24-month lock from October of last year, and then another one that's due coming in the coming months, but that is still locked. Um, that I think is vesting for 12 months. And aside from that, we had investors that bought OTC tokens on the ERC, and these continue to be our existing investors like the Sharuks and Lasers of the world that have ERC tokens, which they have published their wallets of, and again can show that they have not sold anything. So these were meant to be tokens that were able to be vested over I think 18 months, and are continuing to vest to this day because this is when we did our first fundraising in I think we closed in March of, or maybe February of last year, March of last year. And now they still have some vesting attached. But these tokens have been liquid. They've been liquid for a very long time, and you can see that no one has been selling. We have a very strong, long-term aligned group of investors, and I am very thankful and grateful that they've had our back through this, and will continue to have their back to categorically deny these accusations. Sorry, it's been a very long day,
Well, the
and
accusations you're
I'm
talking
having a
about,
hard time with that word.
I mean, listen, I've had some all-nighters in my day as well, so no
Yeah,
harm in terms of sometimes it's difficult. But the accusations you're talking about here, I want to be very specific in terms of what those are, because I don't think anyone
yeah,
is out there necessarily pointing the fingers of. And for me as a journalist, I need to be very accurate in terms of what we're talking about,
sure,
because I don't think it's fair to say that a lot of things that happen in this space are rug pulls, because I don't think what happened with Terra is a rug pull. I don't think what happens with a lot of these things are rug pulls. These are not necessarily, we're not talking about meme coins here. We're talking about JP
mm,
Mullins and the team building a real world asset layer one blockchain that's working with some pretty big names, by the way, when you're talking about Damak and other people in Dubai. I think it is important to talk about kind of where you think things went wrong. If you were out there trying to build a legit project and real project here,
mm,
what do you think, if you identify kind of where things went wrong? In terms of accusations, it sounds like you're pointing them at an exchange. It sounds like you're pointing them at, but $100 million in terms of your guys' volume, essentially, just to put the numbers in perspective, we're talking about one person taking up, in terms of the liquidation, that's $100 million on paper, is essentially the daily volume for a lot of the days for my interest trading.
yeah. Yeah, I mean, I'm not insinuating that it was just necessarily one person, to be honest. I actually think it was a group, and multiple people. And we do believe that it was, centered around one particular exchange, but we're, working to find out as much information as we can. We're in contact with all of our exchange partners. Obviously this is an unprecedented event. It's, a very unfortunate event for our community to have to go through this. And we're going to do what we can to right the situation. And I've been on a few different AMAs and spaces already. I do want to talk a little bit about what we're going to be doing about this. Right now the main point is just to get out in front of the PR side of things, and talk to people like yourself, and get in front of these communities, which we really appreciate. We had this RWA summit in Korea this morning. And I showed up in person, obviously, because I want to make sure that everyone knows that we're not running, we're not hiding. This is not a rug pull. We've been doing this for 5 years, and we're going to continue to do it for the next 5 or more. But the next steps that we need to put together are, how do we actually rectify our community and our holders? One of the things that we're actively looking at right now is some sort of buyback program. And in addition to that, we're looking to some sort of burn of some of the future dated supply, so we can combine those two things, and we hope to put something out on this in the near future. But right now, aside from this program on how to support the community, we want to make sure that we give as much detailed information as possible, as much transparent, verified on-chain data as possible, and provide basically as much evidence to support what we're saying to the community, so they can verify for themselves, and they can see that
Well,
we
one of the
haven't
questions, it seems like a lot of people
done what
really
some of these
did
things are
kind of,
saying.
a lot of people did buy the token after this crash, and so your holders have kind of exploded in terms of people holding this token now. But I'm kind of curious what kind of funds you have to work with in regards to a buyback now, if that is the case. I mean, what should people know?
Yeah. I mean, so I just want to say a few things. I mean, the business is more than solvent. We have a significant amount of capital to continue the business operations. We've actually had a lot of interest from, not only our existing investors, but new investors who want to, lend us capital, who want to support with, a buyback program, who want to, do some sort of long dated OTC. So we're actively, viewing these situations, and we're going to put together a comprehensive program as quickly as possible for this, to get out in front of it. But right now the business is going to continue to function as normal, and we're going to continue, communicating with everyone about this program as quickly as we can. So right now the business is in good financial shape, and we'll continue to push forward.
Well, you mentioned long dated OTC deals, and I feel like that's another thing to kind of make
Sure.
mention of here because, in terms of how some of these token deals go, as you said, the
Yep.
investors we talked about, Laser Digital and Sharuk, locked up. They're saying that they're not the ones who dumped any tokens in all this. But OTC deals are
Yep.
interesting in the thinking around tokens, whether they go to a market maker or go to somebody else at a price that is below, or at least in terms of those structures, however you want to do
Yeah.
them, you as a founder or project leads, generally speaking, take tokens and provide them to people that are now out there. And you kind of,
Yeah.
again, due diligence. In terms of OTC deals, were there a lot of OTC deals that Mantra had made up until this point?
Yeah, I mean, we've done OTCs with a number of institutional partners and, high net worth individuals, family offices, et cetera. But all this stuff is long dated. Actually, none of it's even vested yet. So, obviously, when you have to look at these, we want to make sure that as much as humanly possible, and we do have kind of covenants and restrictions on, resales or secondaries or any of these other things. But we want to make sure that our investors are aligned, that they are not going to be hedging, that they're, ideally going to be long biased or long only. So we're not putting unnecessary, selling pressure onto any of our markets, spot or perps. And of course, we want to make sure that the secondary market is healthy as well, which means from our perspective that it's all going to be association sanctioned, right? So we do work with some brokers that they come to us because they know us, and they say, hey, we have someone who's trying to sell, and we can communicate with our investors and say, hey, if you're going to be selling OTC, like let us do it in an orderly fashion so we can make sure that everyone is going to be aligned to make sure that it's a healthy a healthy market.
I kind of want to go back to that point too, though, because isn't that difficult for
Sure.
you to kind of police, so to speak, if you have kind
I
of
mean,
this
it's a
mirroring of ohm on one side that's already kind of out there? I think, if I can pull up kind of the token allocation, it seems like there was already a
mm,
lot of tokens out there from the original ERC20 that could be mirrored to the new token on your guys' mainnet. And so it's kind of like,
yep.
if that's already out there, doesn't that make it difficult?
Not really. I mean, we've had around 100 million plus ohm on Ethereum bridged over to the mainnet as of the last time I checked, which was earlier today. And obviously that means that a lot of the tokens are in the market already. We are not selling tokens that are like liquid. We would sell tokens that are long
But I'm
vested
not
or
necessarily talking about
treasury
you
tokens.
guys. I just mean holders
Oh,
that may already exist, which would explain kind of how someone could build up $100 million position where on paper those tokens look like they might be great collateral. But if there's not a lot of
sure.
liquidity there, a lot of volume, all of a sudden, if you are the exchange, you'd be like, well, shit, someone out there has a position. We need to close this out because those tokens actually aren't worth what they are on paper.
Um, why would they not be worth what they are on paper? Is it just because of liquidity, or
Yeah,
I
I
mean,
mean, if
so
you've
these
got,
are not so these are not locked tokens that would be used as collateral. This would be liquid tokens that would be put on exchanges. Um,
yes.
you know, I think the exchanges will have their own risk limits, and obviously we have had conversations with exchanges, but that should be between them and the investor that they're liquidating. And generally, when this happens, it happens over a period of time with constant communication. And having not been in those conversations, I can't actively comment on that. But just given the aggressive nature of the liquidation that we saw overnight, it does seem like this was done quite rapidly, and that's why we're quite concerned about it, and looking to any and all legal recourse that we may have, and we're working with our investors to make sure that we consider all in any options,
Well,
basically.
I do want to talk about kind of what you've talked about in the past, because there have been some updates in
Sure.
terms of the token schedules and things like that,
Yep.
because there were, votes and proposals to get to this point, and you guys did have one token drop, if I'm not mistaken, that was coming up,
Yeah.
that you guys were kind of policing for Sybil attacks. That is, people who were making
Yep.
up fake wallets and trying to claim more tokens than they should have been entitled to.
Yep.
Uh, how much of that was kind of tied to the timing of this, and you as, again, the founder here, kind of navigating all this? How much of that was perhaps a red flag in terms of potentially tokens falling into the hands of people that shouldn't have earned them?
I mean, I think it was just a unfortunate coincidence, to be completely honest. We did our first 10% drop for the airdrop, a few weeks back. This had been one that had been postponed. Just to give a quick primer on the tokenomics, when we announced the initial airdrop back in February of 24, for 50 million ohm tokens, it was roughly around, I think, $5 or $10 million total, and that went up to a peak of 400, $500 million. So this was all zero cost basis, farmed ohm, that obviously existing token holders who had a cost basis, who had purchased, had some concerns about. So we did make changes from a vesting perspective, but we did do the first drop. We also did a Sybil reduction, which was significant, but we were able to see there was active malicious activity of multiple accounts with hundreds of thousands of wallets farming and trying to game the system, which obviously is not something that we want to do for our community, and we obviously want to be protective and supportive of our actual token holders who have purchased and have spent money on the token. So we did that detection decision in March, and we did the airdrop or the gen drop allocation of 10% in I guess it was like a week and a half ago or 2 weeks ago. So yeah.
When it comes to that too, though, I guess just to like explain why you would want to be protective of people's cost basis in terms of people who came
Sure.
in and paid money, to protect against
Yeah.
people who didn't pay the same price to get the token.
I mean, I think it's important if someone's going to spend their, hard-earned capital to support your project and support your token. Legitimately feel it is my fiduciary duty and responsibility to
Mm-hmm.
do what I can to help that, right? And when we felt like some people were gaming the system to take advantage and farm tokens in a way that was against the rules, in order to basically just sell on our people and our token holders who've been with us for years now in many cases, that's something that as the founder and supporter of the project, is something that we can't allow. And that doesn't mean that we don't want to, support activities within the community for this, drop. And after the drop, we did still have over 200,000 wallets on the
Yeah.
mainnet that had actively participated, which is a significant amount of people. And those were real verified people who had gone through the process, had not been Sybil attacked, or been part of the Sybil attack, I should say, and have done have held ohm, sent transactions, and continue to hold. So that was a significant number of people who we needed to protect. And this
Yeah.
is not just for the mainnet holders. This is for the ohm holders on Ethereum, which is I think another 100 something thousand. And this doesn't even include the wallets on exchanges. So the number is big, and we take that seriously, or I take it very seriously. And this was obviously a very unfortunate. Yeah, please, sorry.
Well, let me ask you about that too, because again, taking out your word, if you take that responsibility seriously, I guess a founder always has two things to do. One is ensure that like those lockups are maintained, or that they're
Yep.
even in place. We've seen some projects founders don't
Yep.
even do that, and so that's one side. I suppose your point in terms of thinking about the chart and the run up, that's another one where it's like,
Yeah.
in terms of how it got so big, like the market cap getting up north of 6 billion and the idea of the price rising slowly over time, is like, in certain markets, the reason for that, and we've seen it in the past, is you have market makers who are bidding up the tokens with low liquidity to essentially pump the price. And
Mm.
I suppose in your position, again, somewhat unique in terms of having a token that was already existing and then also launching a layer one and having the ability for people to convert tokens from one to the other. I
Yeah.
assume, as a founder, as you're watching that play out, did you at all get nervous too? Because like you said, you don't want someone to come in at a higher cost basis, but
Mm.
if there's not a lot of volume, if there's not a lot of activity that could support it, it almost seems like, and again, just speaking generally, almost every
Yeah.
founder in crypto out there who's making market maker relationships has to essentially kind of make the bet that our team is going to eventually get to a point where demand for our token is going to be so much higher than the supply that we're
Sure.
giving out, or that may already exist because of the way that Ohm was designed. And so you're
Sure.
kind of playing this dynamic. And as you, as a founder, how much of this responsibility falls on you in that instance for kind of what happened here?
Yeah, I mean, it's a great question. Maybe I can walk you through a little bit some of the tokenomics changes as well, so you can kind of see the baseline here, right? So,
Mm-hmm.
when we went through and did these vesting changes for this airdrop, we also changed the team positions, right? So the team has tokens; they're all still verified in Anchorage. They're sitting there. I've already shared the wallet, and it's also in that transparency report. And as part of that vesting we attached to the airdrop, we also extended our team and advisor allocation to one of the longest. So it's actually a 30-month cliff and then another 30-month lock. Having already had the ERC token, I had actually already vested my entire ERC token supply, and I gave it all back and revested it. So I'm vested for the next 6 years, on top of the existing 4.5 that I've already spent building Mantra. So we're long term aligned. I'm here to be part of the ups and the downs. This is not the first rodeo for us, and I do have to take responsibility for this. This was an unprecedented event. I do feel like there was malicious activities that went on, and we're trying to come to get to the bottom of what happened. But the reason why I'm here with you, the reason why I went to that summit in Korea, the reason why I'm trying to be as communicative and transparent as possible is because I live and breathe this project. It means a hell of a lot to me. The community means everything to me, and we're going to continue to do what we need to do to support them going forward. And I have to bear the good and the bad.
Mm-hmm.
And this is a tough time for us right now, but we'll continue to move forward. We're going to build on the strong foundation that we have with our strong partners, and continue onward.
I guess I'm just trying to understand too. When you say malicious activity, that's new to me in terms of what could have happened here, because it sounds like you're saying there was
Sure,
someone who had a bunch of tokens got liquidated. I don't necessarily see that as malicious
sure.
activity in terms of what played out, but
I would say that the timing is suspect in just the way that it was managed, right? Like this doesn't just happen where you have this massive cascade overnight, and that's why we want to investigate and make sure we know exactly what happened there. Because in general, this doesn't just go, you know, like instant. If I don't know if you've ever been margin called or had a loan out, right? If you're in communication with exchanges or lenders or whatnot, if you're
mm-hmm.
communicating and you're doing what you can to stay in contact, provide collateral, or work towards a solution, they're not just going to go and unwind you entirely, and not to the tune of hundreds of millions of dollars, right? That's a big position, and obviously that is something that needs to be managed very cautiously. And again, we just feel that right now that wasn't handled the way it needed to be, and that's why we're trying to figure out exactly what happened, because a lot of people were hurt here.
Yes, I would agree, but I think that that's also kind of the point in terms of the market maker relationships, and kind of, again, only you have
Sure,
clarity into that. For me, on the outside looking in, there's only things, and same thing with everyone watching this. There's only speculation that they have to go off of in terms
sure,
of anyone who might know the most. It would be you, and so I guess that's kind of
of
one of the
course,
questions in terms of how this can happen. There are people who are saying
yeah,
this is very easy to think about, and let's use your liquidation example there. Is if it's the case that the token is actually not trading at where it should be based on dynamics of supply and demand, and it's basically been boosted there by different
sure.
actors in the space, then yes, it would be very normal for an exchange to be like, look, this, and the price action we're seeing would be very normal to where there's no bid, it will collapse like that. And I assume that you, as the founder here, would probably be in the know for those conversations, or at least, I don't know. I would think that some of those relationships in terms of where the tokens are or what volumes on
Sure.
which exchanges, I assume those conversations had happened up until this point.
I mean, to a degree, yes. We had exchanges reach out to us and say, "Hey, what are these tokens doing, and where are they coming from, and why are they being put on the exchange as collateral?" And they would send me a wallet address that had been funded from another exchange that was completely fresh and new. And you know, I'm not able to make a decision or have any information about exactly who that belongs to if it comes from a centralized exchange. Um, Obviously, we worked with multiple different market makers. They all are investors, and I'm more than happy to share who they are. We work with Laser, we work with Amber and Manifold Trading. These are all of our investors and partners.
Mm-hmm.
There was no activity, and I'm happy to put this out categorically, that we ever engage in any sort of pumping of the price or pumping of the token with our market making partners. That is just not how it works, and we don't have the capital to even do something like that. Mantra hasn't raised that much capital over the last 12 to 16 months.
Mm-hmm.
And that is not something that we've ever engaged in. That's not something we would do. Um, and I'm happy to put that on the record. Obviously, I mean, I
Yeah.
guess you can say whatever you want about the value of the token and whether that was fair or not. I mean, I think that's for the market to decide here. And I hope we'll be able to come to a fair market value for Ohm and what we're building. Obviously, we had a lot of hype. We executed really strongly over the last 12 to 15 months. And we had a lot of big major announcements and had people supporting us from the institutional funds and partners that we work with to major real estate developers to Web2 partners like Google.
Yeah.
So this was not something that we didn't pass the sniff test from a due diligence perspective, right? We're a regulated business, right? So we've had requests and we've been transparent about everything that we have to do, and we've been in contact with our regulator partners as well, by the way.
Yeah.
So we're helping and
ask
assisting
you,
in
I was going to ask
everything
you,
that we can
as a
do.
project that is
Yeah.
approved by Vera, I was kind of curious if there were any discussions with them around what happened.
Yeah, of course.
So far,
one of the first calls, obviously. So we've been in constant contact with them. I mean, I think in general, everyone wants to understand exactly what happened, and we're committed to being as transparent and show every single thing we can, right? The next step, aside from the recovery plan, is to show the detailed post-mortem with every single fact and piece of information that we can, public wallets, everything that we can put out to, regain the trust of the community and show verifiably on chain what went down from our perspective, right? Sharuk has already put out their wallets. Laser has published wallets. And, we've published our wallets already as well. And we'll continue to publish more and more information as much as possible. And we're not hiding from this. We're here.
Well, I want to talk a little bit more about that transparency piece as well, as we're looking at, again,
Sure.
as you said, Sharuk's put out theirs and they said, look, these are not our tokens that have been dumped in this case. And speaking to your point of transparency, let's talk about kind of where we do go from here, where Mantra goes from here, what happens with the Ohm token from here, because as you said, kind of squaring those points, there are a lot of questions now around that. And even before this happened, I did see, as I was kind of preparing for this, one conversation on Twitter with one guy asking about some of the transparency and you kind of responding to that in terms of supply, mostly saying that, hey, look, we talked about the Sybil issues around kind of what happened with that airdrop. And you basically responded and said, look, I'm not pumping this one way or the other. I'm not saying it's a bad investment. I'm not saying it's a good investment. We've been transparent with our tokenomics from day one and recently released another report for the community. I was kind of trying to figure out which report that was. I didn't know if you were referring to the Sybil piece, but mainly the main question here was whether or not there was transparency around supply dynamics. I think I even saw Binance talking about putting a warning on Ohm's token listing recently because of concerns around increases to token supply. I'm curious if that's what you were referencing.
So I was referencing the transparency report that you've been showing earlier, the one that had those different buckets in it. And happy to link that. That was published, I think, a week or so ago. But throughout the course, yes, one exactly. So throughout the course of Mantra's history, we've always put out these updates to Ohm token emissions and supply. This is something that we have throughout the course of our tokenomic changes, starting in the beginning of last year when we merged the ERC token with this new chain token, was something that was all verified, done through governance votes and approvals from the ERC 20 Mantra DAO community on the Ohm token. And we put out continual updates over the last few months. I don't have those links right now, but happy to share those as well, so you can kind of see how this has progressed. We've worked very closely with Binance and other exchanges, and whenever there's a tokenomic shift and change, we immediately go and talk to them about this. And any tokenomic changes through these public verified governance proposals or Medium articles or anything that we put out publicly, we always share directly with Binance and other exchanges. And I know for a fact that they are aware of this change, obviously, which is why many exchanges have intended to support the mainnet, and Binance is one of those. We have been in contact with them about this support, and they are aware of this token supply chains. This is not a new thing. This happened in October of last year.
It's not a new thing, but it did strike me as a little unique, I suppose, in terms of the idea of a one-for-one mirrored burn situation across your guys' L1 and existing tokens. Was there not a discussion around whether or not some of those should be converted if the supply outstanding was too large, as we've already discussed in terms of how many Ohm tokens were already out there. I'm looking at the proposal. I'll bring the proposal up, but a lot of people called out this proposal as potentially being one of those ones. I think it had 91 votes. I think you mentioned that, look, when we were doing this, a lot of people said we were dead back then.
Yeah,
I mean, talk to me as kind of the guy who, well, I guess I shouldn't put it all on you. This was a Dow vote, but
sure,
in terms of those holders and yourself leading the charge, what that
sure.
decision process looked like and whether or not you would go back and change it.
No, I wouldn't. I mean, I don't think we would even have the Mantra chain layer one if the Sen passed. So initially, when we were starting, we were going to have the Mantra ERC token, and we were going to have another L1 chain completely separate that was going to do some sort of airdrop back to Ohm called Omega. AUM was going to be the token there. And we spoke with investors, we spoke with key team members, and this was in the end of 2023, in the beginning of 24, when no one knew about Mantra really. I mean, we were down 95%. Everyone thought we were dead, right? And we had this miraculous comeback that was also supported by this repricing of a Dow token that was, dead to this new L1 for RWAs. Obviously, this was like a combination of these different narratives and things that we've been working on. The way that the mirror bucket works is effectively when we created this new supply for the chain. Again, this has all been public, and everyone who's been supporting the project has been fully aware of this since this proposal was put out, and we've continued to communicate this throughout the last months and year. That the mirror bucket effectively is the bridge between the ERC token and the mainnet coin, right? And we effectively have a mirror of the existing ERC supply that sits there. It's again verifiable on chain. And when people send over their ERC tokens, it goes and gets sent to the burn address. There's been about 100 million tokens burnt so far. And one-for-one basis, it's a one-for-one fungible token. So you can even look on, for example, Bybit. They have an ERC and they have a Mantra chain listing. So you could go and deposit an ERC Ohm, and you could deposit or withdraw in a mainnet Ohm, or vice versa. And the thresholds that we have are effectively a 30,000 token threshold, where if you send through the bridge, it instantly gets filled within a few minutes. It verifies that it's been sent to the burn wallet and then spits out the new one. Or if you're larger than 30,000 tokens, there's a manual process where a multi-signature wallet effectively approves it and sends it out. And this can take up to 24 hours, just to make sure that, again, this is that's a massive opportunity for a honeypot. So even when we launched, I forget exactly the price of Ohm at the time, but it was still like hundreds of millions, if not billions of dollars of Ohm that was sitting in this bridge wallet. And we wanted to make sure that that wasn't going to be a vector for attack. And we wanted to make sure that, again, people could bridge their tokens properly to the mainnet coin, which is where all the new activity was started and was happening, and where we were building for the future.
Well, let me ask you this too, JP, in terms of being here now, post 90% drop, and thinking of the people out there who are probably watching and maybe got in at a much higher price than where it's trading now.
Sure.
And if that's the case, like you said, they've been parted with their hard-earned dollars. Do you think you and the team did enough in terms of transparency and telling people like what things could happen here?
It's a good question. I mean, I do feel like we have always tried to be as transparent as possible. I don't feel like transparency is necessarily the issue here. I do want to continue to try to be as transparent as possible and make sure that everyone can see that, again, we haven't actually sold a single token. The investors
Again, I
haven't
don't
sold
think
a
it's
single
the
token.
selling of the tokens that anyone's mad about necessarily, weirdly enough. I think, it's weird to think about this, and I know you're not in the U.S. as far as jurisdictions go, but the SEC just kind of put out their own stance on like, hey, what does transparency really mean in crypto if you are dealing with these things? And looking at that, they're essentially like, hey, reveal who your market makers are, reveal the agreements that you've made, reveal who might have tokens out there, how the supply could change. That's essentially what they're saying. And so I guess if there are takeaways now, let's start fresh, JP, in terms of, okay, the token Ohm is trading at 70 cents now, where it was trading at about $6.82, almost $7. It's 1/10 of where it is now. And so, I mean, I guess when you want to speak transparently about those agreements, like the cost that other people, their cost basis with these big market makers or investors, as the case may be, that's a lot of supply overhang. So if you're talking to someone new, what kind of transparency, what kind of pieces would you want to put out now?
I mean, I think the best thing that we can do right now is publish as much, on-chain information as possible to show where the tokens are sitting, what exactly occurred. That's
But this
step
is
number
more
one.
off-chain. This is more
Uh,
off-chain in terms of those agreements and OTC deals and things like that, I guess, is my question.
Um, I mean, I think the off-chain elements are relatively, I mean, it's along with the vesting schedule that we've put out publicly for, since inception. Um, so, obviously we're happy to be putting forward as much information around any of these deals as possible that the, Monte Association has been involved in. We're definitely committed to that. And, I will, support that. And, we'll be publishing what we can. I think right now, you know, investors are going to want to know what happened. It's
Mm-hmm.
it's good that you're asking questions about both the on and off chain side, and we are fully committed to providing as much information as humanly possible. So I make that promise.
Well, in terms of where we go from here, that's one of the big questions, obviously, I think why a lot of people are watching
Yeah,
this right now. And I do want to give you the floor for kind of where we go from here and where you intend to go
yeah,
from here. Because again, to be fully candid, I hadn't heard much about Mantra before this. And I think it's possibly
sure,
because you guys are over there. We're over here in New York.
yeah,
There's a difference between US users and users in crypto around the world. I
sure.
hadn't at least heard too much about it. But I mean, in terms of real world assets now on this chain, I mean, for you, like you said, you hadn't raised all that much money. So when you talk about a buyback plan and getting back, I think it's fair to say, even you might agree, that it's almost unlikely to get back to those levels now. But what does JP think about the plan to get there and what assets you have now to kind of work with?
Sure. I mean, this has happened to us before. We've been down over 95% when we first launched, and again, people thought we were dead, and we made this comeback, and we're committed to do that again. Um, from the founder perspective, whatever I need to do to make sure that the community gets treated rightly and properly and taken care of, I'm willing to do what I can. This is more to me than anything, and we need to do what we can to right what happened and support our community during this tough time. We do have strong, big institutional partners, and like as I was mentioning, we are funded. The business is solvent, and we're continuing to move forward and execute on our plan. Um, the significant amount of institutional interest that we've seen coming in after the fact has been really good to see. We are committed to doing what we can from a buyback perspective. I'm committed to doing whatever I can for my founder tokens that I've again revested. Um, you know, this is not a financial thing at this stage, from my perspective, and frankly, it never was. Um, so I want to make sure that we are able to run this back and continue to move forward, and we're going to work with our partners, with Sharuk, with Laser, and others,
Mm-hmm.
to create a proper buyback program, to create a burn mechanism as well, so people can see what's going on and burn any unnecessary supply. And I've already spoken with our investors, and they're already committed to helping and support this as well.
If that were
So
the
I
case,
don't
though,
have
just to pair those points, and just because I want to be correct in terms of how these processes normally go, in terms of what you
Yep.
discussed, the liquidation, if there were investor interest or institutional demand there to potentially step in at a moment like that, you're saying that those conversations didn't happen?
You mean in terms of supporting the liquidation?
In terms of, yeah, in terms of demand up until this point, you're talking about institutional support and investors now post kind of 90% move to
No,
the
we had.
downside.
I mean, it happened like aggressively overnight, right? I mean, this was on a Sunday evening. It wasn't like we had a ton of time to react. I mean, I was asleep.
Mm-hmm.
So we obviously have worked with our partners who hold tokens, who will continue to support the project, who have dry powder. But we've had an influx of other new ones who have been interested in the project as well, and are going to continue to support and have continued to show that they are interested in supporting the project. So I think that's been good to see that it's people understand that we've been building something for a long time, and this isn't our first rodeo, and
Yeah.
we're here to do it again.
In terms of how this has impacted you too, you've talked about this, and again, you've been working on this project for a while. I've seen your interviews over the
Yeah,
years from talking about Ohm even before the mainnet was launched last year.
yeah,
And I mean, for you personally to kind of go through this, I've interviewed people before. I've interviewed founders in the space, Do Kwon after the Terra collapse. I've interviewed SBF after FTX went down. I've interviewed a lot of project founders. And I am
yeah.
curious for you, JP, in terms of whether or not there may have been some sort of kind of, I don't want to say relief, because obviously it doesn't sound like you're relieved today, But in terms
Mm.
of kind of token run-ups and knowing what could come, is there any sort of sigh of relief in terms of, okay, token price is down here now again? Like you said, you've been here before, you've been through collapses before. Is
Yeah.
there any sort of like, maybe this is where we should be?
No, I don't think so. Um, you know, Market value aside, this is not something that I would ever feel relieved about. I mean, an unprecedented event happened. Many people lost money and got hurt, and I take no relief in that. I'm upset by it. It's been a very tough day. I feel for our community. I feel for people who lost money. I feel for our team. I feel for our investors. Um, and it sucks. I mean, I feel really bad,
Mm-hmm.
to be honest. So this is not something I feel any relief about. I feel horrible. But I am committed to do everything in my power, spend every moment of my time to fix this and do what's right. And I stand by those words, and I think the community who's seen us over the last 5 years can back me up on that. That I am a man of my word, and I'm going to do what I can to support this and take responsibility for things that go down, and not running from any of it.
Well, like you said, I mean, I don't know. You say you feel horrible. I'm kind of trying to put the pieces together in terms of which part you feel bad about. I mean, obviously, price moving to the downside is one thing, but it sounds like you're saying that that
Mm,
wasn't on you anyways. And so, if there is a part that you feel bad about, specifically, I guess, aside from price, which piece is it? Because it sounds like you said you haven't dumped, your investors haven't dumped. So I'm kind of curious to kind of square what we're
sure.
seeing from people outside of the Mantra ecosystem and what you feel bad about.
Yeah. I mean, I feel bad that people, lost money on this. Like people who had nothing to do with this situation, lost money because they believed in the project or they believed in the token, and woke up overnight and their token's down 80-90%. That sucks. And I feel bad for people who've supported us and who are
But which
catching
part of
flack
that is
and
on which part of that is on JP though? I guess if I could put a finer point on it, like which part do you feel bad about in terms of what you did?
they believed in me. They believed in me and the project, and they lost money on that. And I like I said, I feel like this is my fiduciary duty to our token holders and our supporters, and I just can't help it. I just feel bad about it, and I don't really know what else to say about it, to be completely honest. I mean, I'm hurt. I feel like our community is hurt. Our token holders are hurt. Our investors are hurt, and I feel responsible, even if I didn't do anything negligent or malicious or anything. But
I am
I'm going to
curious
do
though
what I
if your investors, when you say your investors are hurt, like I wonder
can.
if they're actually down necessarily, even if it is trading at 70 cents. Like you
No,
said,
I
you've
don't.
been through the 90.
I think they're still not down, and that's why again, investors who had liquid tokens still haven't sold any liquid tokens.
Mm-hmm. So maybe they're not necessarily hurt so much as maybe other people, like you said, who got in afterwards. And this
Sure,
is kind of always the dynamics of, again, why we have these conversations, why we talk to you. And maybe if we had talked before, maybe some of this would have been out there too for people to know a little bit more about kind of the project. Again, just kind of waking up to what you guys are working
sure.
on and how this all kind of is happening in terms of real world assets and obviously a very hot space right now. I
Yep.
guess, JP, I'll give you the last word as we wrap this up. And again, appreciate you coming on here to have a conversation for an hour to talk through all this. And
Yeah.
sounds like you've been up for quite a while managing some of the things that happen next. I'll give you the last word
Yeah.
just to speak honestly to people out there who may have held this token, what you would tell them.
Yeah. I mean, I want to say thank you for first off letting us come on and letting me come on and share our side of what's going on. I just want to say again, we're going to put together a plan for total transparency on what went down. We're so to make sure to follow myself, as well as our company Twitter account where all this information will be published. So we'll be putting that out. We'll be in the next few days also coming up with our buyback and burn program to make sure we do what we can to support our investors. We're going to be in constant communication with the community, and again, I just want to assure the community that we're going to do whatever we can to right this situation. And for those who have supported and reached out positively, thank you very much. It means a lot to us. And for those who are doubting us at this moment, we will continue to work as hard as possible, and we'll come out of this stronger than ever. So again, thanks for the opportunity to discuss what's going on, and hopefully we can even do this again as we have more updates. I'll obviously make sure to keep you in touch, Zach, and share everything that we have going forward, so you can continue to share with your community as well.
I would appreciate that, and I think again there are some times where people don't want to do that and don't want to keep people in the loop. And again, this is somewhat of a unique scenario in terms of what played out over the weekend. And so I think letting people know everything you know is always kind of what
Sure.
this space is hoping for in terms of transparency and the like.
Absolutely.
But for the time being, we'll let you go, and hopefully as those updates come to the top, we'll hear a bit more. But Mantra co-founder JP Mullin, thank you again for coming on Coinage. Appreciate the time.
Thank you, Zach. I appreciate it.
All right, and that there is what we've learned in this collapse as we talk about token prices and the idea of tokens pertaining to these chains. It's not necessarily something unique. It's not necessarily something new in terms of discussions around supply and transparency in market maker relationships, investor relationships. There are a lot of these things being pointed out, whether it's in meme coins or whether it's in tokens for layer ones, converting tokens, all a very unique situation. And hopefully that was more information than what we had when we started, frankly, when we even heard about this collapse. And I think there are, as I said, a lot of people in the US who were saying, I've never heard of this project and I've been in crypto since 2017. And so there are sometimes disconnects between pieces of the world in crypto where some of these projects, and certainly the facts pertaining to them, are not universally known. And we'll let kind of the conversation that just happened stand as, again, as more information comes out, as these discussions are had, as we learn more about all this. And then hopefully we have JP back to kind of talk a little bit more about these things. But in general, seeing a lot of comments come through right now in terms of the discussion we just had. If this is the first time you're watching Coinage, I want to thank you for being here with us. Perhaps you don't know much about us. Perhaps you don't know that we're a community-owned show based here in the US. Perhaps you don't know that you can mint an NFT to actually co-own us. And when I say co-own us, I do mean different things in crypto. I don't mean just a token that could go up and down in terms of price. I don't mean what we just talked about. And I don't mean what we've covered before with our first exclusive interview with Do Kwon after the Terra collapse. What I do mean is an NFT that gives you co-ownership in what we're building as a legally registered cooperative here in Colorado, as the first NFT project in the States to offer a path to patronage dividends as a Web3 media show that is owned by our NFT holders. It's a very new model, and I think it's one that does transparently speak to the issues we just raised. It's why we landed on our model, particularly because some of these things, as we just saw, cannot go well when you're dealing with markets like this. And I throw that out there mostly because, as we're seeing from the SEC, a new path is needed. I think a lot of people in crypto would agree that we need more transparency. I think you just heard from JP saying, we need more transparency. I think most of the holders in this would probably agree they demand and beg for more transparency. And so I do think these conversations need to be had. For Coinage ourselves, very interesting that we will be going down to DC in just a few weeks to talk about this with the Crypto Task Force. We've had Hester Peirce on the show many times before, and awesome to see an appreciation of what are the right levels of transparency and discussions like that being had now in DC. And for Coinage to be on the forefront of that, frankly, I'm pretty excited and pretty proud of what we've been able to build here at Coinage. But enough of me shilling my bags on a Monday show. Texas, as we look at that. I also want to give thanks to our sponsor as well, who makes this show possible, at least for now, and that would be Stacks. Thank you again to our friends at Stacks. Bitcoin's $1 trillion potential is untapped. Stacks unlocks it. Convert BTC to SBTC and earn up to 5% APY in Bitcoin. No custodians, just trustless DeFi. Your Bitcoin working harder. You can bet on Bitcoin's future now with Stacks. And as we sign off, in case you're just learning about everything that played out, that was a discussion around what I'm seeing right now, the token down a bit more here at 69 cents, which, again, if you back up just a few days, we were looking at $7 for this token, the Ohm token. As we discussed there, a lot of unique pieces to this story when it comes to taking an ERC20, converting it over to their own native L1 token and having it trade on a few different chains as well. Interesting to see where this goes. Certainly not over. Now you've just heard from JP. And if you just heard from us for the first time, want to close with what Coinage is all about for the new viewers who might just be tuning in to what this is all about. And I wonder if we should even talk about more price stuff, Texas, in terms of where we go from here from Bitcoin. All that stuff's on our YouTube channel. We're certainly going to be updating it this week, as we always do. We host these shows Mondays, Wednesdays, Thursdays here on Coinage. You can catch all the big headlines in Web3 at coinage.media to co-own this with us as well. For everybody here at Coinage, we'll sign off with our trailer to explain a little bit more about what we do here, how it all works. If you haven't yet minted an NFT to join, consider that. I'm not going to tell you to buy it, but if you want to, come join our token-gated Telegram where we discuss all of these things that happen on the show and vote to have different guests come on the show as well. As a community-owned show, it's up to our NFT holders to tell us what to cover. And I appreciate everyone who's built this with us. For everybody here at Coinage, I'm Zach Guzman, signing off. We'll see you again soon.
What if you could own a show? Not just subscribe, not just smash that like button, but actually co-own and reap the rewards as it grows an audience. With Coinage, we're building something that's never been built before in media.
I love what you're doing. It's a new business model.
You get to mint a free NFT and then you get access to the platform.
Why are more projects not doing this model?
Coinage is the first community-owned show, answering crypto's biggest questions and getting to the heart of why they matter.
What you're doing here is actually bringing like journalism, like legitimate, actual, real, quality journalism to this space.
We're relying on a community, not just to co-own the show and share in its success, which it will, but also to help us make it via a legally registered cooperative. We're dropping our digital membership passes as your ticket into the Coinage Co-op, and our community will steer the co-op and all of its funds. What the show chooses to cover is voted on, half by our caucus members and half by our network members. By being a legal cooperative steered by you, we'll also split net proceeds 50-50 with active members in both tiers and our production company as our show makes it to prime time or attracts sponsor dollars. So buying a pass into our co-op isn't just taking down a paywall or making a donation, it's giving you real control, unique benefits, and if the show does well, real upside. If season 1 was what we could do by ourselves, imagine what we could do with you. So grab a pass while you can and come build season 2 with us.